Hey Forex fortune hunters, it's Tom Wilmot. Welcome aboard. We're going to dig further into this new GMMA template that we're seeing up here on the screen. We have a pound yen 15-minute chart, and I'd like to show you where the entries might be, where your stop loss might be, how to optimize that risk versus reward. And we'll talk also a little bit about the current situation with Brexit and Boris Johnson wagering everything all in, as they say in poker, and what was the result. Okay, hang on to your hats. We'll get started right after this. Okay, fortune hunters, let's get digging into this new GMMA template again, just as a quick review. Against the backdrop of Brexit and all the developments in Great Britain this week, I'm recording this on September 5th, which is Thursday, and it's the week following Labor Day in the United States. So, if we back up, we can see here, as usual, if we back up, we're using a 15-minute chart in this particular case. Here was our Sunday session. Then Monday, the Labor Day session, had some activity in the London area, right? This is our London Open, 3 a.m. Boston time. And you can see there was some activity because the Brits and the Europeans don't care much about Labor Day. They're not celebrating it. But then we kind of flatline here as we move through the rest of the afternoon, and there's nothing much going on in terms of the U.S. session. Now we move into Tuesday, and all of a sudden, Boris Johnson looks like the she-devil, and he's going to ruin everything in the British Isles, obviously, by having a hard Brexit. And this was the concern until a number of people in his own Conservative Party turned on him. 21 revolted, including some that had been Conservatives for 37 years. Winston Churchill's grandson, but never mind. The situation is that we had a quick reversal after this downturn, and we moved higher because he was voted against in Parliament. And ever since then, you can see during the week, we've had a continued uptrend into today's session. As I said, it's Thursday, and 131, almost 132 position in the pound versus the yen. So, in any event, let's back up again and just take a look at our indicators. Sorry, I'm fading in and out here. Notice that we have here our blue medallion, which means that we've had a crossover down of the 12 and 24 EMA. You can see the bands developing here, and you can see also, and as a matter of fact, let me put a line here, because we can make it a little bigger, just so you can be sure to see what's going on. Here we go, that's a little better. Now we have a situation where we've had this down arrow, which means that the yellow 12 EMA has crossed over the signal line. And that's another confirmation, in my opinion, that we're going to be in a downtrend. Typically, after that happens, I wait for a pullback into the bands. If I don't get one, then I just kind of wait till the next trade. I'm not going to chase it. But on the other hand, here's the situation where we have an optimum risk and reward. Risk versus reward, rather. Because here, we'd be in a position to have only a 10 pip stop loss available to us, maybe 15 because it's a downward trend and obviously the spread might need to be counted, but even we put our stop at say 15 pips and we never have taken it out. So it's a very optimum situation for us, and in fact the move downward was 121 pips. So 15 versus 121 is a very nice, 5 or 6 to 1 reward to risk, and worth taking a trade of that sort. If you were in this situation over here, you would obviously not want to be positioning yourself with a sale entry at this point. You'd kind of take a look here at the uptrend. Notice here we've had a reversion to the mean. this yellow 12 EMA being the mean here, and obviously here again a reversion to the mean, and now we come down, but notice that we can't take out our previous low, so we have to begin to be cautious. Notice here also that even if you had stayed in the trade until here, or here, you would not have lost all your profit from the downturn overnight. If your stop loss moves with you down this line, you'd be in a position to protect your profits, or at least a good portion of them in this trade. Okay, notice again what's happened is when our 12 EMA crosses over, we have set up our white medallion. We're headed to the upside. We have some chop. There's our arrow, meaning an upward trend. We did have a pullback here that could potentially have stopped us out, but if you had waited for that pullback I mentioned to you before in this area here, you would be in a position where even this trade to the downside is 15 or 18 pips. So if you wait until close, that's only 9. You probably would have been safe even through this particular situation, okay? But anyway, even if you got stopped out, the risk versus the loss, the reward is of good quality. Now here we are in the U.S. session, noted by our red vertical line. Let's see where our profit potential was, a move back upwards of 64 pips. So then we move into what I call the dead zone, which is this period of time between 1 or 2 o'clock Eastern time in Boston and New York. Notice we don't have any activity even in this volatile time. The Asians aren't trading, the people in Asia, the Brits have all gone to the pub, so the Germans are at the Hofbrauhaus, so nothing happening here, just the last tail of the U.S. session. And also, this is when the spreads will increase, so stay out of entering trades at this point. Kind of take your profits off here if you have them, and wait to strike another time. Okay, then we move into the next session. We have a little downward trend here. I like to wait. This is 8 o'clock Boston time, basically, which is when the Forex.com turns over its daily, and its clock goes with it. But bottom line, you're kind of waiting for the upward momentum, the upward arrow, another pullback into the bands. Notice that our RSI is also confirming for us that we're not going to be dropping back dramatically, and then we're off to the races with a huge uptick here at the beginning of the London Open, and then a pullback into the bands here and so forth, and a continuation higher. This was the Wednesday trade. Then we come into Thursday. Now I wanted to make a quick note of this here, because notice that this downward trend even created a situation where we had a new Zeelander signal line to the downside. Now, one of the things you need to remember is that unless you get that confirming arrow, which we do not have here, in other words, the bands never even reach the signal line, that's a false breakout to the downside. Now, what caused that one, interestingly enough, was there was a rumor right around the time of the London Open that, in fact, in the House of Lords, in the upper parliament, that Johnson was going to be able to manage some kind of a filibuster of the bill that would eliminate its passage. But then as soon as it was reversed, and several of the lords said, no, it's going to pass, we've reached a compromise with the conservatives, you can see then we just rocketed higher, because what's happened now is that there is a bill on its way to the Queen after a vote tomorrow that will demand that there be no hard exit from Brexit, and no hard exit from the EU. So this has put everybody back in a very cheery mood, except one very lonely prime minister. Okay, so now we have, again, this situation here, and as I mentioned, you don't really get into a position where you have a pullback here. Your first pullback is prior to this level where we see our arrow. better not to chase at this point. It looks like it's headed higher. What you can do in this particular situation, and I will say if you find yourself in a position where you're trying to chase, what you can do is drop down to the 5-minute chart and see if there's an entry that develops here. Here's our position. Notice on the 5-minute chart we did get this entry and a nice pullback here. We almost come back and have a reversion to the mean with these candlesticks here. So there is an opportunity going into the 7 o'clock hour. Better maybe on the 5 to work here, but obviously we're also coming kind of to the end of that trend. We'd have a situation where you'd want to put your stop loss down here below the 24.28 area. And then we have a pretty nice trade actually if you want to scalp at 41 pips. And that's how I would be using my super new GMMA template that we've been discussing with you. So I hope that's helpful in terms of an analysis of how it's done. Now, please check out, if you're not already a member, over at fxfortunehunter.com. Sign up and have access to all of the blog posts and the video sliders. We've put these templates, the Trend Magic Chandelier template, which is called Double Whammy, New GMMA, and we'll be getting into 3 events soon enough. We've done video sliders on how all of these are built at fxfortunehunter.com. We also are setting up a page where you can get your free indicators and get them from the Dropbox file that we've set up for you. So it's worth it. Please also like our videos if you do, and take just 5 seconds to make those clicks and subscribe. We're here to try to help you make a fortune in fortune hunting the Forex. So once again, Tom Wilmot, thanks for watching and have a great day.